5 assets that are always better than cash. The word inflation has caught the minds of financiers and economists across the world. But what about you and me? How do we take advantage of the situation to boost our personal wealth? The numbers that came out at the beginning of the year were catastrophic. However, the Fed has calmed everyone down by steadily raising rates, a seemingly reasonable response to such a dangerous threat. Throughout history and across the globe, countless examples exist where inflation was allowed to snowball into hyperinflation that destroyed whole economies. The backbone of any economy is its currency. When managed badly, the whole system is liable to collapse. You'd be surprised. It doesn't take much. Even simple double-digit inflation is more than enough to cause chaos amongst investors. Suddenly, anyone sitting on a pile of cash is hugely at risk. Consider a secret stash of $100 million. With inflation only at 10%, the real value of that stash by the end of the year is already reduced to $90 million. This means you lose $10 million by simply doing nothing. As you can imagine, this causes real panic in the market, which causes a spike in the purchase of assets that are safe havens from inflation, things like gold, for example. This causes the value of these assets to spiral out of control into a dangerous bubble that only spurs inflation to increase even more. What a dangerous cycle. The inflation rate back in January of 7.5% could not be accurate given that housing forms the biggest slice of individuals' income whilst forming only a small percentage of the overall consumer price index where inflation numbers are derived. This means a huge portion of the inflation has not been identified, almost deliberately, and so the real rate of inflation is vastly understated. Thus, for most normal people like you and me, the real rate of inflation is much higher. Add to this the current war in Ukraine, and that number is only going to increase. To begin with, the price of oil is steadily growing. This scarcity of oil then goes on to affect the price of pretty much everything else in the markets. The result is an even more challenging supply chain situation, which has already been suplexed by the recent pandemic. No one foresaw the invasion of Ukraine and the inevitable effect it would have on global markets, but regardless, the Fed and central banks worldwide are now forced to react by raising interest rates, which can only serve to cause stagflation. The situation when prices rise while the economy simply stops growing. So how on earth can we, the people, protect our wealth against inflation? Are there any obvious assets out there that will continue to grow your wealth and weather the storm no matter how hard inflation comes banging on the door? Let's find out together. Make sure you like this video and subscribe to our channel for a chance to become one of the most highly educated investors on this planet today. Subscribe to this channel right now. Okay, let's go. Hold on, did you subscribe yet? Okay, ready. Asset number 1, dividend stocks. Despite what people may try to tell you, the main purpose of any company is to generate profits. Without generating any real profits, the business will no doubt fail soon enough, regardless of the size of its market cap. Companies may spend billions on marketing and posing as successful, but at the end of the day, without producing real income for their shareholders, the survival rate is very dismal. In this way, dividend stocks are set apart from the others, and those at the top of the mountain draw envious looks from all other market participants. These companies have consistently raised their dividends for decades and decades to the pleasure of their shareholders, who have successfully used these investments to weather the historic storms and such market turbulence as numerous wars, recessions, and inflations. Dividend stock prices are not always the best performers based on stock price alone, compared to the latest glamorous tech companies such as, for example, Tesla. But the dividend income ensures gains that beat inflation with a devastating knockout. Not only that, but dividend stocks provide you with a vital tool for financial freedom: passive income. Passive income is the money you make while taking a shower, lifting weights in the gym, and watching your favorite movie. Not bad, huh? If for decades and decades these businesses have consistently raised their dividends, what makes you think they're going to stop now? What, you think a little bit of recession will stop them? You think the after effects of a virus can slow these behemoths down, or even a war in Europe? The proven strategy of dividend stocks remains one of the most effective tools to combat inflation. But the stock market isn't the only way to secure and grow your savings. There are far more diverse options out there. This leads us to number 2, government bonds. Many people prefer not to invest in government bonds, as the return is not always as glamorous as other investment strategies. That said, one of the biggest advantages is that these are considered some of the safest financial instruments ever created. This is because for these instruments to fail and lose your money, the United States government itself, the most dominant and secure economy on the planet, would have to fail with them. Can you imagine a world without the United States economy? Well, maybe you could, but in reality, if the US economy collapses, all global markets are likely to collapse with it. So naturally, these government bonds are pretty well trusted. It's worth knowing bond rates and interest rates have an inverse relationship. This means that when interest rates go up, bond prices decrease and vice versa. This is because higher interest rates make it attractive to invest in other investments, which in turn decreases demand for bond investing, whilst lower interest rates make bond trading much more appealing. These government bonds are not likely to make you a millionaire overnight, but one thing's for sure. A lot of wealthy people put at least a portion of their money in these instruments to keep their money safe and growing above the rate of inflation. Government bonds may not always beat inflation in the short term, but over longer stretches of time they are considered to be very inflation-defiant. Next on our list is, number 3, cash flow businesses. The inception of the internet gave birth to a new wave of investors who actually care less about real business profits and more about the intrinsic value of their stocks. No matter how high your shares are valued, investors always need cash in their pocket in order to stay liquid and take advantage of the next spontaneous investment opportunity, not to mention to pay for living expenses. For this reason, the majority of pro-investors pay great attention to cash flow. This is the amount of cash a business generates on a consistent, regular basis. Besides the previous examples, such as dividend stocks, already discussed above, there aren't that many other options of reliable cash-generating assets. Having said that, one great example is to become a private landlord. This business model involves using bank debt or mortgages to buy up small properties for the purpose of renting them out to tenants. The income from the tenants can then reliably be used to pay off the mortgages on those properties every month, while still generating extra profit cash for yourself as passive income. There is a certain level of maintenance involved in managing a portfolio of properties, but with enough planning, this can be successfully streamlined using either subcontractors to take care of cleaning and handyman repairs, for example, or many landlords prefer to deal with a management agency who take responsibility for all general issues for a small fee. Before choosing to become a landlord, remember to familiarize yourself with the relevant tax rules in your jurisdiction. Another example could be to become a partner in a small business, like a grocery store, for example. Becoming a partner could allow you to invest in the business and enjoy healthy profits without having to be involved in the management side of things. Now let's move on to number 4, mutual funds. What is one of the main reasons investors use mutual funds in their strategy? To deal with the dangers of volatility. Take Facebook, for example, now known as Meta. Back in late 2021, the Facebook stock price was $378 and seemed to have no limits on its ever-growing share value. Compare that to now. Post-pandemic, the stock price has dramatically fallen by over 45%. This was a sudden drop that many simply could not predict, and needless to say, so many unknowing investors lost a ton of money. This kind of volatility is exceptionally dangerous, especially for those who are heavily invested in the stock. Mutual funds exist to take care of spreading risk on behalf of their investors, meaning you can rest assured your money is much more diversified and theoretically much safer. Mutual investors can invest in such a wide range of securities such as stocks, bonds, or even real estate, and the funds themselves come in multiple different forms, e.g. equity, fixed income, etc. Other funds choose a theme, such as technology, for example, or take Cathie Wood's ARK Invest, one of the most well-known funds on the internet. ARK focuses on innovative technology companies that are due to transform the way we live over the next 5 years. This is in areas such as AI technology, biogenetics, and even space travel. Many investors have a preference for index funds with a strong track record and a generous fee structure. Fees are often a big turnoff for investors who want to avoid having their profits eaten into by hedge funds who may rarely beat the market but still opt to take a chunk of your money for investing it. A particularly reliable fund is the Vanguard S&P 500 Index, which charges exceptionally low fees and have consistently shown that they can beat inflation. Since its inception back in 1957, the Vanguard S&P 500 Index has returned an annualized average of around 10.5%. This is a solid track record of over 60 years. I have allocated a portion of my savings to this fund and continue to add a small amount of my income to this fund each and every month to bring about cumulative gains. Last but not least is number 5, real estate. We mentioned above that managing a property portfolio is a good example of a solid cash flow business investment. But the video would not be complete without giving real estate a whole section of its own. As one of the oldest forms of investment in history, property investing has been reliably employed to bring about a stable and inflation-resistant income for the long term. Real estate is a fantastic investment for many reasons. We are not just concerned with property appreciation here, which on its own can be huge if invested wisely. But this form of business produces reliable, passive cash flow that can afford you with the financial freedom you need to transform your life completely. That means no more rat race, no more grinding away at a dead-end job for days, months, years on end. Now with real estate, you have both money and time. That means you can be sweating it off in the gym or down at the bowling alley with your pals. Meanwhile, the money continues to come pouring in every month. Lastly, real estate provides you with somewhere to call home and a roof over your head. This is arguably priceless. Overall, it's clear that real estate is about way more than price appreciation. On price appreciation alone, we can show you from the data that it has always outperformed inflation. Even back in the 1980s, when inflation reached a staggering 13%, real estate still proved resilient. If you've made it this far in the video, you are well on your way to grappling with difficult times and high levels of inflation. In fact, you may even benefit from the situation. With all that extra cash, make sure you check out clothes.com for the best ethical and sustainable streetwear fashion clothing on the internet. Make sure you like this video and subscribe to our channel, the #1 finance and investment channel on the line.